So now I'm supposed to be up here. Got it down now. Before I start, how many people here know what CrunchBase is? Not TechCrunch, but CrunchBase. It's a show of hands. Okay, that's pretty good. Oops, a little fast. So make sure, okay, I'm on the right place. So just as a quick review, just in case you're not familiar with it, TechCrunch and CrunchBase are they're sister companies. They're both divisions of AOL, and they're both in the technology startup space. TechCrunch is, they position themselves as the most influential tech publication in the world, and they do emphasize world. They have 13.2 million visitors or readers each month, and what was astonishing to me is that 45% of those readers are international. So it really is an international organization. And they're also working very hard on extending conferences internationally. So Berlin is next month, and then they're doing smaller conference series in India and Asia and Russia, actually, starting now and moving through next year. CrunchBase is a database of startup information. It's a database of founders, companies, and investors, and it was founded around the same time as TechCrunch. And CrunchBase is really the data arm of it. And right now, there's about 425,000 entities in CrunchBase. And that includes, again, the investors and the funding rounds and all the things like that. Now, CrunchBase today looks exactly like it did when it was started in 2007. The website, you know, it's actually a nice little bit of internet history. You can see how things were developed 6 or 7 years ago. It hasn't changed at all. What CrunchBase was founded to do was to solve a specific problem that the TechCrunch editors were having. And that was that every time they covered a company, they had to re-ask the same questions. Who are the founders? How much money have they raised? You know, when were they founded? What were their products? Just really basic questions. And there wasn't a good place on the internet to go and do that. So at the time, Mike Arrington, who was the founding editor of TechCrunch, said, you know what? Let's do something better than a spreadsheet. Let's create this thing where anybody can come and contribute their data. And that's what they did. And slowly over time, even though the website didn't change at all, more and more people contributed. The graph on the right is a condensed version, I guess, of the traffic growth. But you can see, you know, starting from 2007, it's just been a straight line. And as the whole startup culture has taken off and more people are interested in startups, like more people just keep coming and coming to CrunchBase. And it's to the point now where, since the beginning of 2013, 50,000 people have contributed content to CrunchBase. It's a community-driven product. And when I say contributed content, they're creating profiles. They're describing companies, they're describing investors in funding round, they're describing the founders, and they're all putting that data in. A question that I get a lot is, you know, who uses CrunchBase? And it's a fair number. It's not the size of TechCrunch from an audience perspective, but it's pushing 2 million uniques a month. And when you look at who's using CrunchBase, there's a long list, but I'll go through a few. First, investors. Most investors that you talk to, in particular in the Silicon Valley, are using CrunchBase every day. Now, they're not making investment decisions from CrunchBase, but whenever they hear about a company or a founder, CrunchBase tends to be the first place that they go to learn about, you know, what exactly is this and how is it connected to other companies that I'm aware of. We also hear a lot of stories about founders using CrunchBase. The best story I've heard is a founder who downloaded the entire CrunchBase data set and reversed engineered it to find the investors that were investing in companies like the one that he was founding. And he had found a bunch of companies before, or a few companies before, and he'd been very successful. And he could have gotten money from anybody for his new venture. But what he wanted to do is he wanted to find out the specific VCs and the specific partners at those VCs that had been successful in the area that he was going to go after. So he used CrunchBase, he reversed engineered all the data, and he came up with a short list of investors, and he actually went out and got money from them. We also hear people using CrunchBase in big corporations, the Facebooks and the Googles and the Yahoos of the world. And actually, one of the places that's using CrunchBase is Facebook. So we met with their CIO, and the CIO said, you know, we use CrunchBase all the time because when we're trying to hire people, and we have to hire a lot of people, we want to find out if people are socially connected to startups. You know, are your friends in startups? You know, did you go to school with people in startups, et cetera, et cetera? But they said the problem we have is we don't know what the startups are. So we take the social graph and we take CrunchBase data and we put it together, and we use that to help us hire. So it's an example of, if you look at internal teams at large corporations, and obviously recruiters use it, reporters use it, lots of other people use it. And it's great. They come back and they use it every day. So if you look at what CrunchBase is part of is this whole venture data ecosystem. It's all this data about who's getting funded, where the money's going, when exits happen, who's founding these companies. And CrunchBase isn't alone. I mean, there's a lot of people out there who provide this data. So Bloomberg, Capital IQ, FactSet, those are all multi-billion-dollar companies, and they provide this data. And then there's the startups in the venture ecosystem. Venture Source, which is actually owned by Dow Jones now, that used to be a startup. PitchBook, Privco, CB Insights. If you haven't heard of them, I understand. But they're all in this space. So the question is, what makes CrunchBase different? And it really comes down to this, and it's hard to read, but CB Insights, they're extremely aggressive on pricing for this data and how much it costs to have access to the data. Their prices for an individual is $1,000 a month to access venture data. For a corporation, it's $84,000 a year. And they are a bargain compared to the other people in the space. But CrunchBase, it was founded to help the startup ecosystem. It was founded to help entrepreneurs figure out what ideas they wanted to go after. It was founded to help venture firms and angel firms. And if you're going to help everybody in the ecosystem, you can't put a big price tag in front of it. When you put these price tags in front of this data, what you end up having happen is, the hedge funds use it and the large VCs use it, but the average person who thinks, wow, I've got this idea, I want to find out if anybody else has done it and whether ideas like this have gotten funded before, they're just blocked from the data. And ironically, all the data is public anyways. If you go read any TechCrunch article about when a company launches or when they raise money, it is amazing how much data they give away. They will tell you how many users they have, how many app installs they have per day, how much money they've raised. They'll even tell you how many employees they have. Tons and tons of data is all public. And so we believe at CrunchBase that you can just take that data and you can put it together. And so actually what we're doing, and CrunchBase hasn't changed visually, but we're investing heavily in the platform of it. And what we're doing is we're creating the Facebook social graph equivalent for startups. So it's a graph, and it connects everything together. It connects the entrepreneurs. It connects the founders. It connects board members. It connects advisors. Events like this, who's presenting here, patents that people are getting, memberships in different organizations like different venture capital associations. It's going to try and pull all of that together. And we're going to try and do it by asking people like you to contribute the data. And what we'll do in return is make it available for anybody. And we believe that we can build the definitive data set of startups and small companies for the entire world. And we can do it all in something that is easy to access, just like Wikipedia. And that way everybody can do a much better job in trying to figure out what they want to do or where they want to invest. So this is what CrunchBase 2 looks like. It looks something much different than a website that was developed as an internship project in 2007, and it'll work on mobile, which is a big win for us, and expected at Q1 of next year. So if all of this data is out there, I guess I wanted to talk, and related to this conference, I wanted to talk about what's happening in funding now that there's all of this data. So it's my open data's impact on investing. The first thing that's happening is that a lot of people are out there quantifying startups, and they're quantifying investors, and they're quantifying entrepreneurs. So at the top here, you have big VCs, Sequoia, Greylock, Kleiner Perkins, and they're just a few that I put logos in there for. What they're doing is they're building data science teams. So if you walk into their offices, you're not just going to find investors anymore. You're going to find data engineers, and you're going to find big data scientists. And what they're doing is they're sifting through the data. They're sifting through the App Store data and through CrunchBase and through web analytics and all of this stuff. And they're trying to identify interesting companies and interesting people at those companies that they should pay more attention to. And talking to some of these firms, what they said was, if we wait till a demo day, like when everybody's presenting, we're way too late. We have to identify those companies before anybody knows about it. And we can identify those companies by looking at the people. We can look at people who were at companies that got acquired. And then we can look at a year after they got acquired and say, wow, their lockup period for how long they have to work at those companies, it must be expiring. I should probably go start talking to them now. Or they can look at App Store data and they can look at trends that sort of outperform what else is happening in that ecosystem. And so they're trying to quantify what's going on in companies and with people and use that to drive their investment. Now, obviously, it's not driving those entire investment thesis for these companies. What was said to me was interesting was if they, from one of these guys, if they could just get data to drive 15% of the decision-making process, they feel like that would be a win. And they're all moving in that direction. Now, there's a lot of smaller venture firms and angel firms out there that don't have the resources and the billion-dollar funds that are required in order to hire a data science team. So there's other companies out there that are building analytics as a service. Mattermark, Seedling, Dashboard.io, these are just a few of them, but there's a bunch, and there's going to be a whole lot more in the next 12 months. And so what they're doing is they're pulling all of this data together. A lot of it is CrunchBase data, and then augmented with all kinds of analytics from all over the web, and they're creating stats. And they're either publishing those stats for anybody to see, or they're creating private stats that only the venture guys can see. And they're selling it to the venture firms, and they're selling it to the big corporate investment groups and stuff like that. But it's all, again, it's all about taking all this public data and pulling it together. And then the last thing is, there's a whole new set of venture firms out there that are being formed today solely around the data. So SignalFire and AngelList are a good example. SignalFire, what they're doing is they've built an entire data platform, and they're raising money right now. You know, it's not a huge fund, but they're raising a fund right now where the investment thesis for the fund is that all the partners are going to be plugged into this data platform all the time. And they can figure out who's doing what interesting stuff, you know, where. You know, it doesn't matter whether they've made the connections with those companies before. They have all the data to try and make decisions going forward and to try and reach out to these entrepreneurs and to these companies early on in the process. AngelList is using all this data also. They're using it to score startups and to provide information to people about, you know, how they might want to co-invest. The message from all of this stuff is that for a long time, a lot of startup data was private. You know, how much money people had raised and what their business model was and who the founding team was. All that stuff was private, and it still is in a lot of cases. And there's absolutely, you know, circumstances where you want to operate in stealth. But more and more, operating in stealth and not being transparent about what's happening puts you at a serious disadvantage when more and more people are concentrating on these metrics all the time. And so, you know, the more data that's out there actually helps and doesn't hurt. So last thing I was going to talk about is, you know, all this data is really changing the funding climate in the United States. And one of the big things that it's changing is this thing called crowdfunding. Now, when I say crowdfunding, it's not to be confused with Kickstarter or Indiegogo, which is about selling products ahead of their manufacture time. Crowdfunding, at least the way I'm referring to it, is when you stand up in front of a room like this and you say, I have a startup, here's what it's all about. You know, I have a $10 million pre-money valuation and I'm trying to raise $5 million. Please, will you give me money? And then the crowd comes in and says, yeah, you know what, I'll put money into that. And somebody else says, I'll put money into that. So crowdfunding is changing a whole lot in the United States right now. What I just said about, you know, standing up here and saying, you know, valuations and how much I'm raising, up until September 23rd was illegal to do in the United States. So the laws changed, and they said now it's okay to publicly solicit investment. So what's happening is all these crowdfunding platforms are being built, and they're built where companies can put everything about themselves and their team and how much money they've raised and what terms they're raising on. They can put it on a website, and people with money can come in and say, wow, you know, that's an interesting startup. I might invest in that, or I might invest in this. There's all kinds of really interesting stuff going on there. And a lot of people in the United States right now are kind of sitting back and saying, you know, is this going to change angel funding, or is it going to change Series A funding? There's one stat that CrunchBase looked at across all of our data. I think we published it last week. So far in 2013, we project it's the first year where there is going to be a decline in the number of angel rounds that have been done since we really started keeping track in 2006. And one of there's a lot of reasons why that might be true or is true. One of the theories is that with this whole crowdfunding thing happening, more people are standing back, waiting to see how crowdfunding works out. And now once all these platforms are out there, then they'll go and they'll start investing again. But there's a lot of questions about crowdfunding. One of them is, is somebody going to be able to look on a website, read about a company and read about a founding team, and make a decision to put 25,000 or 50,000 or more US dollars into a company? And that's a scary proposition, but it's mitigated some by the fact that all this data is out there. That you can look at the founder and be like, oh, they founded 3 startups before, and those 3 startups exited or they didn't exit. Or they're in this particular market, and the startup that they founded already has this much traction. So there's a lot more data out there. But the question is, how many people are really going to be willing to, put money in, which is a big if, although a lot of people are betting on it. The second question is, will it impact only angel investment, or is it also going to start impacting Series A investment? Naval Ravikant, who runs AngelList, super great guy, super knowledgeable. He's been talking a lot about the fact that crowdfunding is not just for angels. It's not just a replacement for that seed round of $100,000 or $500,000, but it's really something that plays an important round for things like a Series A. And what he said is, if you're a company and you're doing reasonably well, or you're successful and you've got a couple people who are going to back you in a Series A, why not put the deal out and let the crowd fill in the rest? So maybe you want to do a Series A and you want to raise $5 million and you have $4 million committed. Why not just put that out there and let the crowd fund another $1 million? So there's a lot of sort of wondering what's going on in the United States about crowdfunding. I think a lot of people are kind of stepping back and waiting to see, but there's a ton of platforms that have been built around supporting this. AngelList is probably the most popular one, but crowdfunders, seeders, Gust, all these platforms are out there. One thing for CrunchBase that we see with these platforms is there's no reason why people can't raise money on multiple platforms. And if you want to reach the most number of investors, you're going to go to all the platforms, right? It's like if you want to sell a product, you want to be in all the stores. You don't want to just be in one. And we think what's going to happen with that is that as people are on more of these platforms, data transparency becomes a bigger issue, because you have now no longer do you just have to get your data out there, but you have to synchronize your data. And what we're hoping with CrunchBase is we're hoping to be that single platform around the world that has the canonical data about a startup, and then you can go to the various funding platforms of your choice to decide which ones you're going to invest in. So this is, I guess, the big change of 2013 in Silicon Valley with investing. And that's it. So I'll be around for questions later.